Good day to everyone joining us from around the world. So on behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. So my name is Aidan and I'll be guiding you through this exciting 2-hour journey as your host. So today's live stream is not just a presentation, but it's a conversation, and it's window into the engine room of one of the most fast-growing and forward-thinking firms in the industry. And of course, I am not here alone. I'm joined by two remarkable guests who help shape what WeMasterTrade represent today. Skilled traders, mentors, role models within our community. So first, let me introduce the ever-composed, always insightful Daisy. Welcome, Daisy.
Thank you so much, Aidan, and hello everyone, and thank you for spending your time with us. I'm truly looking forward to today's sections. There is so much to cover, not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offer, from how you start, how you grow to how to earn. This is the kind of platform that doesn't just fund trades, it's build trading.
Absolutely, and next to her is someone who brings soft analysis and clarity to every strategic. She's sharp and she's a root force in our trading space. Please welcome Scarlett.
Thank you, Aidan, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is what we're going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our system, from packages to promotion to scaling and long-term profit sharing. If you ever have questions or even doubts, today is the day to ask them.
And that's exactly what we're here for. Whether you're planning to WeMasterTrade or you are already a part of our funded trader program, today's live stream is going to give you the full picture, not just the highlight reel. So over the course of this session, we're going to walk you through what WeMasterTrade truly is, what we believe in and how our programs are designed, and why we're doing things differently from traditional brokers or platforms industry. So I want to be clear, this isn't just about sales, this is about understanding. If we want you to know what you're signing up for and what kind of structure support your journey and how you can use that structure to not just succeed, but scale.
And speaking of structure, I'll begin with sharing the story behind WeMasterTrade, how we were formed as the funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that philosophy flows everything we offer, especially our trading pockets, which we will be discussing in details. We will explain the logics behind each one, what kind of trader they ever looked at our packages and thoughts which spread you want for me. Today we will answer that.
And more than that, we'll also do a live comparison between packages. We'll break down pricings, account size, maximum drawdowns, consistency rules, and even payout side by side to help you make a fully informed decision. So it's one thing to say number on your website, but it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always, how do I stay compliant while trading? So we'll move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We'll explain what the day loss limit is and how is it calculated, why it includes both close and floating profit and loss, and how to avoid violating it, especially overnight. We'll go into the maximum total loss, the consistency ratio, and we'll even address common misunderstanding about trade sizing and risk per trade policies.
And we won't just explain rules in isolations, we will explain them in the context of live trading decisions. I will share some personal examples of mistakes I make when I first start trading under funded conditions and how I adjusted. Because rules aren't meant to restrict you, they are there to protect the integrity of your growth.
While we're on the topic of helping you succeed, we'll be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. So we've had some amazing responses to our promotions, but also some confusion. So we'll be showing you exactly what to do step by step.
From there, we'll transition into a discussion on our scale plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structural growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income as WeMasterTrade is through our profit-sharing model. This is the heart of what makes us different from prop firm. When you trade on the funded accounts and generate profits without breaking rules, we share that profit with you up to 90%, but then more to it. That's just the percentage. We will explain the full payout cycles, thresholds, and timeline today.
Now, I nominate if you're watching today's aren't just traders, you're also educators, influencers, or people with large networks. That's why we're also taking time to explain our affiliate program. And we'll do it transparently. We'll walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanations of the two referral rules and the minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We've seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the term, and building long-term income streams.
So as you can tell, this is not just a surface level live stream. We're diving into everything: packages, rules, promos, scale-up pads, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want it to be interactive, not just informative. So if you have questions at any point, please drop it in the chat. Our moderators are watching and we will answer as many questions as we can. Your voice matters.
And if you're watching this on replay, don't worry, we'll leave timestamp and summaries below, so you can always reach out to our team with any follow-up inquiries. Our support team is credible and they really care about helping traders succeed.
So, to wrap up this work, I'd like to say this: WeMasterTrade is not just a platform, but it's a commitment to build real traders, to create fair structures and scalable pathways for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take action, you're exactly at where you need to be. So let's dive into the journey together. And let's begin. Once again, welcome to the WeMasterTrade live stream. So before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is, what we believe in, and why we built this platform the way we have. Because when you're putting your trust and your trading into the company, understanding its philosophy isn't just helpful, but it's essential. And so this segment, it's about origin, intentions, and impact. It's about how WeMasterTrade began, what values underpin the forum, and how those values translate into real tools and outcomes for traders like you. And to work through that, I'm joined as always by two people who live and breathe this principle, Daisies and Scarlett. So let's start at the beginning.
Team agents. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many prop firms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital regardless of their backgrounds, locations, or financial situation. We were founded in 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade builds its name on these signal sharings, investor networks, and copy trading techs, WeMasterTrade were designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note, WeMasterTrade is not a broker. That's not just a label. That's a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funny packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk. We give you the roadmap. You bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. That's why we invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibrations and multi-asset strategy design. So the WeMasterTrade Academy isn't just about theory, it's about implementation. So we've designed the curriculum to match the real-world trading environment within WeMasterTrade. So what you learn you can apply directly to your funding account. And to ensure that our systems and content meet global standard, WeMasterTrade is proud to hold an ISO certification, which confirms that our educational products and traders promotion campaigns meet rigorous international criteria for quality, structures, and learning engagement.
That certifications is a big deal because it shows our long-term commitment to develop traders, not just collecting fees. In an industry where many so-called platforms come and go, WeMasterTrade has positioned itself with a real operational stability, compliance framework, and internal accountabilities. We're not here for a season, we're here to help build careers.
And we've seen that commitment translate into real stories. If you visit our testimonials page, you'll find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade helped them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have students become full-time traders. We have women re-enter the finance world after career breaks. And we have young professionals from underbanked regions finally access the market with a funded account. That's the impact. That's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. So for those who want to stay engaged and up to date, we maintain a regularly updated blog section where a team of experts and educators share weekly insight, trading psychology breakdowns, market reactions, and platform updates. So we believe that learning never ends and we keep our traders informed. But let's also talk about culture. What makes WeMasterTrade different isn't just the product offering, it's a community mindset. So we actively promote trader integrity, respect for competitions, and knowledge sharing. Whether you're in a Telegram group, watching YouTube series, or you're engaged with online support, you actually see that we listen.
And we will speak honestly here. Is many platform traders is just customers, but at WeMasterTrade, trader is the products. Your performance drives the business, and your voice shapes the platform, and your consistency determines how far we can scale together. That mutual accountability is rare, and this is something we are proud of.
And if you're ever doubted that whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonials, take a look at our When it counts and connects with people who come through the system, the stories are real, the capital is real, the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. And we are here to challenge the status quo of trading access, to build systems that reward performance over promotions, and to create real scalable income opportunities for traders around the world, regardless of their starting point. So this is more than a platform, it's the trading movement. And if you're here to ready to be a part of it, today's live stream will show you everything you need to know. And thank you Daisy and Scarlett for the deep and honest work through. So coming up next, we're going to take these foundations and connect it directly to our actual offerings. That means we'll be discussing all the different account packages that WeMasterTrade, how they differ, how they're designed for, and what kind of results you can expect from each. And now that we have explored who WeMasterTrade is and the principles that we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussions of account packages. So this is where it all begins from remote traders choosing the structures that best align with their goals, their style, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about so each package of WeMasterTrade represents a different pathway toward growth, and today we'll work you through all of them, what they offer, how they're structured, and most importantly, who they're designed for.
Exactly, Aidens. As WeMasterTrade, we don't believe in one-size-fits-all models. That's why we built two distinct product lines for traders: the challenge packets and the instant funding packets. Each class include a variety of account size and configurations because we know that traders come with a different strengths, risk appetite, and timeline.
Let's begin with a challenge model, a two-phase evaluation system built for traders who want to prove their skill before being allocated capital. It's structured, fair, and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge models, you begin with a simulated accounts and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are three stakes in total: phase 1, phase 2, and the funded state.
Take for instance our $10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. So let's break it down by phase.
In phase 1, you need to achieve an 8% profit target, which is $800 with the a 5% daily loss or a 10% overlap limits. You will have unlimited time to achieve this. That is the key difference from many platforms. We don't pressure you with that line.
Once you pass phase 1, you move to phase 2 where your profit target drops to 6%. That is $600. The risk rule remains the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed that target.
And finally, once both phases are cleared, you enter the funded accounts. When you trade with a real capital, no profit targets, and your profit share jump to 90%. That's the ones of highest in the industries.
This account is ideal for newer traders or experienced traders who want to start with lower pressure and learn the system. If you're still refining your strategies or want to get a feel of WeMasterTrade risk frameworks before scaling, this is the perfect package to begin with.
So now first you are confident in the strategies and want to start with a largest account size, we offer 25,000, 50,000 and 100,000 challenge packages. So the structures is similar, two phases, the same 5% dailies and 10% total, not similar, but the profit target scale proportionally.
For examples, in the $50,000 challenge, you will need to hit $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 100. giving you a room to adjust position sizings.
And the $25,000 to $100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funding accounts. And if you already passed all the approved challenges or have a strong verified trading history, this is a good step up.
So every challenge package comes with a one-time fee. For example, which is $45 for the 10K challenge. So this fee is refundable once you become funded and meet minimum performance conditions. But what if things don't go your way? You're eligible for a 30% reset discount to stock cash. But what if you don't want to go through a challenge at all, but instead want to access real capital immediately and get paid daily on receipts? So that's where instant funding packages come into play.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced, disciplined traders a chance to trade real capital from day one. No evaluations, no demo stages, just pure live trading packed by a structured, fair, and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending your style, preferences, and goals. Today we're going to walk you through a 5-man instant funding packages: standards, 5-10-10, 5-10 euros, 5-10-10 novices, and customized. We will compare the details, but more importantly, we'll help you figure out which package is right for you.
So let me set the scene quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay once, follow the rules, and you're trading live capital. And every account, no matter its size, includes no time limits, up to 90% profit share, scalp plan over 1 million, support for EA, swing trades, scalping, and even edge up to. So now let's go package by package, and as we go Daisy Scarlet, I want you to jump in with real advice. Who should actually choose which one, and what kind of traders you've seen succeed with each?
Let's start with the standard package. I always describe this one as a bad friend for traders who just want stability. You're getting up with $200,000 in capitals with a very manageable 4% daily loss limits and 6% overall limits.
It's like that calm, steady account that doesn't push you to overtrade, and with the profit split up to 90%, there's serious earning potential even if you're taking a slow and steady approach.
So what about commissions?
Competitive across the board. Forex at $4 per lot, rolls at $4 per lot, indicates at $1, stock at just 0.07 per lot.
And everything is allowed: news trading, scalping, weekend holding, EAs, HFT, you name it.
So for the audience, if you're someone who trades regularly, understanding your strategy, wants a full range of assets, and plans to play along the game, this is your sweet spot.
And it's perfect for intermediate to advanced traders who already know their edge but don't want to trade with a target pace challenge. And if you ever had an account blown due to unrealistic rules, you'll find the standard model refreshingly fair.
I would also say it suits where swing traders with their 4 to 6% risk profiles give just enough flexibility to hold the multi-day positions, especially with weekends holding fully allowed.
Alright, and now moving over gear, let's talk about the 5-10-10 packet. Same capital ceiling up to 200,000, but now you get a 5% daily lot and a wider 10% overall limit. And why does that matter?
That extra cushion is massive for traders who scale into positions or take multiple entries per setup. You've got more room to breathe, especially in high volatility markets.
And the perfect target here is also 10% with a line well with the window. Plus, You still get the full support for scalpings, EAs, new tradings. It's very trader friendly.
And this is best for day traders, especially those trading assets like Nasdaq or gold that move fast. If you got a test intraday strategy and just need some risk-ridden room, this is your package.
And also for traders who want structures but don't mind having that perfect target, the clear milestone motivates some people, especially if they are payout oriented.
And now here's a personal favorite, these 5-10 zeros. So now you get 5% dailies and a 10% overall, but no profit target, non-zero.
And that's a blessing for high precision traders. You are no longer chasing a number, you should focus on protecting equities and growing capital slowly and steadily.
This one is loved by low-frequency traders and snippers. If you enter 3 to 5 trades a week, this is your space. You're not penalized for patience, you're actually rewarded for it.
Veterans, swing traders, red concept traders, people who prioritize consistency over speed. If that you will try here.
And let's be honest, not everyone wants to hit target. Some just want to trade well and scale up legally. This is their home.
So now for the rule braggers, or rather those that don't want to be evaluated on how even their profits are, the 5-10-10 notice removes profit consistency tracking, right?
Exactly, same 5-10 risk profile, but you're not required to keep your profit grow smooth.
As such, trades copy are not allowed in this one, so it's for manual traders only, and you need to trade responsibly. But for aggressive traders who sometimes hit big spikes, this is the play.
And this is perfect for high-risk reward traders or anyone who had issues with consistency rules at other firm. You trade how you want, just keep it inside the drawdown box.
And now, last but not least, the customized package. So this is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily loss overlap to your liking. Plus, you can fund up to $400,000, more than any other accounts.
It's premium, flexible, and comes with all trading styles allowed, including EA's news trading, weekend holding, HFT, and more. And who's it for? It's for top-tier professional XH fund traders, signal providers, high-volume traders, anyone with a very specific structure in mind. This package lets you build it.
I always say if you try other models and nothing quite fit, build your own blueprints with customized different area.
So to sum up, every instant funding package we offer comes with clear risk parameters, fat conditions, deep market access, and real profit potential. There are no limits and payout starts as early as 1 day in.
And no matter your strategies, copying, swing, ovals, or manuals, there's an account that's aligned with you. The key is picking the right ones now, so you can start building consistency from the start.
And if you're ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
And up next, we'll walk you through exactly how to protect your account, avoid breaches, and understand the key risks and consistency rules that power our entire platform. Alright traders, now that you have seen packages, now let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you're funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account is come down to one thing, the daily loss limit.
Yes, the dreaded daily loss is the one rule traders think they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here's the good news. Once you understand how it really works, it's become one of your best tools for risk control. So today, let's break it down from top to the bottom.
So what is a daily loss? Also know the maximum daily loss.
This is the maximum amount of loss you are allowed to incur in both floating and close trades on any single trading days. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key things here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction and it's what strips a lot of people up.
So let's work through a live example. So imagine at the start of day 5, your balance is 105,000. Your equity, however, is higher 107,000 because of open floating profit.
If you are on 4% daily loss limit, we calculate it out the higher numbers of $107,000.
So 4% of $107,000 is around $4,000. That means equity for the rest of that day can drop below $102,000 or boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close, it's real time. If your trade is floating loss and you haven't closed it yet, if your equity dips below the threshold for even a second, well, that's it.
Now let's reverse it. Since the start of day 7, your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since the balance is higher, we pay the 4% on the initial balance, so $4,000.
So now your equity must get above 96,000 throughout the day. If it drops to 95,999, auto liquidation kicks in. No warning, no margin call.
The system will send the market order to close all trades, everything liquidates. Your account is disabled, you can't trade again unless you purchase a new package.
And here the kickers. The auto close happens when the system detects the threshold will process. But due to the market fluctuation, your final profit and loss might look worse than the actual thresholds. That's because the ecosystem executes a closures based on the price slippage at the time of liquidation.
So even if your only intended to take a 3,900 loss, one slippage spike in gold on Nasdaq until it is for 200, that's why we say don't buy the edge.
Alright, let's talk about how to avoid violating this rule because this is where the broke mindset gets in.
First step is know your buffers. Never plan trades to take you right off the edge of your limits. Leave a little 5 to 15% room below the max loss, especially in the volatile market.
Tip to track your equity, not just your balance. I can stress this is not. Most traders stare at their balance all day, but if your floating loss is dragging your equity, you're heading toward a violation.
Tip 3 is dashboard or tracker. So inside WeMasterTrade, we provide rich dashboard that shows your live loss stats. Use them, check them, don't rely on memory.
Big loss early in the day. If you lost 3% in the first hours of London sections, maybe it's time to stop and reflect, not try to revenge trades your way back up.
Another big one, trade smaller during news hours. If you're trading gold during NLP with full loss size, you're practically begging to break the daily loss rule. Cut position size and ride post volatility.
So what are the top rookie mistakes you see when it comes to daily loss?
Over-leveraging. Traders positions 5, 6, 7% of their accounts, thinking so quickly, but if the trade turns red fast, it's already too late.
Number 2, holding overnight without checking exposure. If you hold 3 trades overnight, wake up to a 60-pip gap, the loss could be hit before you even open your eyes.
And the third, assuming that closed trades are all that matter, they're not. Remember, equity includes both floatings and closed positions, so the total equity line is your score.
And I always say this to new traders, the dialogues rule isn't your enemies. It's in your account in a box. It's designed to protect you from doing something irreversible.
Exactly. Force discipline. You can't be aggressive only within the box. And if you learn to trade inside that box, you'll last longer than 90% of the market.
And one last note, this isn't just about rules. It's about trust, and WeMasterTrade funds you because we trust that you manage risk responsibly, and the daily lot is there to protect that trust on both sides. And now we're going to enter a short break, and after that we're going to continue to explore the other trading rules here at WeMasterTrade. Welcome back, trader. So in the previous segment, we have covered the daily loss rule, and if you haven't already clicked that one out, you're missing out. But now we're moving on from the daily boundary to the absolute boundary, and I'm talking about the maximum loss rule, also known as your account stop loss, the lines that can't be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rule works. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they will chip away that's their accounts and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seatbelt, then the max loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under your current trajectory and closed immediately.
So what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you're allowed to lose across all trades for the entire account. If your equity, that is your real-time capital including open trades, ever dropped below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss which reset every day, this one doesn't reset. It's a cumulative. You can lose 2% one day, 3% the next, and if total loss cross the line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you start with.
So let's work through a concrete example. Suppose you have an instant funding account with an initial balance of $50,000 and your max loss limit is 6%, which is $3,000.
This means your equity can never go below $47,000 ever. Doesn't matter if you make $100 yesterday. The total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you lost $2,000 in closed trades and you have another $1,200 floating in red, your equity is now at $46,800. That's below the limit account closed.
And just to be clear, it's not about the net gain or loss across trade. It's about where your equity stands in real time relative to that stop loss floor.
Here's where it's interesting and a little tricky. Let's say your account grew to $51,000. Congrats, you're in the profit.
But your max loss limit is still based on your original $50,000 starting balance. So if your limit is 6%, the threshold is still $47,000. What changes is how much room you have to fall before you hit it.
Exactly, and you have 4,000 in total buffer because 51,000 minus 47,000 equals 4,000. So your profits gives you cushion, but the floor never moves.
And what happens when you break it? Once your equity drops below the maximum loss threshold, even by a few dollars, auto liquidation triggers. All trades are closing immediately at the market price.
And again, like with daily loss, if there are volatilities or slippage, your accounts might close out below that line. That's just execution reality.
And most importantly, once it reached that account is permanently disabled, so you need to purchase a new package if you want to continue trading. No reset, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close losses every day. You should always know how close you are to your max loss floor. Don't wait for the dashboard warnings. Calculate manually.
Second, you use your profit as protection, not permission. Don't trade floating profit as a great way to increase risk. Instead, consider locking in gains by reducing loss side when you are ahead.
Third, manage your floating loss aggressively. Even if you're positive overall, a single trade with poor stop placement can take you from safety to shutdown in a few minutes.
4 is stay cool when you're close. If you're down 5% sales of 6% limits, that is not the time to double down. That's the time to step away, pause, and retain your interest.
And the biggest mistake, underestimating flowing drawdown. Traders close 3 loser and think, okay, I still got room. But they forget about the 4 trade flowing minus $1,800.
Second is traders who chase recoveries after a bad day. They lose 4% in one day, come back swinging the next day and thinking they will make it back, and instead take another 2% boom violation.
Third, and this one hurts, ignoring sleep page during major news. Even with a tight stop, new candles can gap you straight through your limit.
The max drop rules is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful traders I know see their stop loss, whether personal or institutional, as a non-negable boundary.
Right is a reality track if you're constantly pushing up against your max loss. The problem isn't the rule, the problem is your system or your psychology.
And every WeMasterTrade, we're not just giving capital, we're teaching a structure, and the net loss rule is what separates gamblers from professionals. So remember, your net loss is a percentage of your starting balance, typically 6 or 10%. It's calculated using equity, not balance, and it includes both close and floating losses, and once breached, your account is gone. So coming up next, we'll explore the consistency rules and why steady profits matter more than big spikes when it comes to growing, scaling, and getting paid.
If you ever made $5,000 in one day, then make $200 in the next 4 days and wonder why my payout got flat, this next segment is for you.
Let's dive into the reasons of profitability and how to stay consistent under WeMasterTrade's model.
So over traders, we'll talk about the daily loss limit, and we'll just cover the maximum loss rule, 2 pillars of protecting your capital. But now it's time to shift gear just a little and talk about not risk, but about results. Because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see trader grow, scale, and can actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
The rule right here, the profit consistency rules, is what separates a lucky spy from a reliable trader. It tells us whether you can make money over time or if you just hoping to hit one big winners and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawals, profit sharing, even scaled up. If you are funded and you are wondering why your payout didn't go through, this rule could be the reason.
So let's define clearly the profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. So the less consistent, meaning you have one giant profit day and then smaller or losing day, the higher your ratios.
The ideal symbols is simple. If your 80% of your total profit came from one day, that's not consistencies, that's lots of risks. What we want to see is traders who make profit day after day, even if it's small. That's what we can scale.
And the formula is really straightforward. Take your best trading day profit and divide it by your overall profit since you started the account, then multiply by 100.
So the best day divided by total profit multiplied 100 equals your profit consistency percentage.
And just to be clear, best day rate for your highest close profits in a single calendar days, and total profits is the sum of all your close profits minus any close losses or open losses across the life of accounts.
Let's say you have the following results over 5 trading days. Day 1 plus $100, day 2 plus $200, Day 3 minus $50, day 4 plus $100, and day 5 plus $60.
This means your total net profit across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal 410.
So your best day was day 2, that's $200 in profit.
So now we apply the formula and you'll get a profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistency with the comments. The traders are way above that, so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they're not consistent enough. They have one big day that made up half of their total profit. It's not sustainable, and that's what we're looking at here.
And this is why I really want to speak to traders. If you are relying one or two big days to query your entire accounts, that's not professional trading. That is your volatilities. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the ones who get scaled up, who get fitter, who get structures with more capital.
So let's address the number. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. And how to improve your consistency? Let's say you're over the limit, don't panic. You're not disqualified, you just need to keep trading and even out the curve.
Hey, how to do that? Once it plays smaller size for a few days, 2 is take smaller controls win, and for $200 and $300 day. 3 avoids big swing trades that push by your ratio in, and the last is spread profit across multiple days, not one month setup.
And for those who are using EOs, monitor your equity curve. If your EOs is going profit heavily into one day, you might need to rebalance it. The bot might be profitable, but it won't pass this through unless it's configured with payout logic in mind.
And common mistakes to avoid: mistake 1, traders hitting target early then taking the rest of the week off. That inflicts your best day and leaves the rest of your curve flat.
Mistake number 2 is overtrading after big days, thinking I'm sick now, and trying to squeeze more instead of averaging out. That's high ratio.
And mistake number 3, thinking this row is just a hurdle. No, it's not. It's a reflection of what we actually look for in our master trader.
And at the end of the day, this isn't about controlling yields, it's about building habit that can handle scale. If you can't be consistent with $25,000, what happens when we give you $100,000 or more?
Exactly. Consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you're serious about long-term trading.
And we've seen it in time and time again, the traders who respect this rule, they're the one who gets multiple payout, referrals, and grow into 6-figure funding accounts.
So don't forget the rule, understand it, use it as a feedback tool. If your ratio is too high, great, that means you got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculate your profit consistency to automate quarterly. You can check it anytime under your statistics tab.
And to recap, this rule is about balance, not volume. Aim to keep your bet say under 20% of your total profit, spread your wins, record multiple sessions, and monitor your progress in a dashboard. So we've talked through the daily loss limit, tackle the maximum account loss, and examine how profit consistency shapes the long-term payout and grow. And now we arrive at the final and perhaps most overlooked rule of all, the risk consistency rule, or what we call the discipline test.
That's right. Traders often think the biggest enemies in the market, but truthfully is inconsistent, especially in how much you are risking from one trade to the next.
This rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you manage your position sizing. And if you're serious about scaling at WeMasterTrade, this rule is non-negotiable.
So let's break it down. At the core of the risk consistency rule is simple. You're not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with the trade idea, both closed losses and floating losses, even fees, commissions, and swaps account.
And for some accounts like the Fitantino PC package, this rule gets even stricter. There, the limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcome, it's about the process. The more erratic the distance sizing is, the more volatile your equity cut becomes, and that's what makes you hard to scale.
This rule protects you and the firm. It helps preserve capitals, prevent loss, equity swings, and make sure your assets plays out over time.
Think of it as your account heartbeat. If your position size goes up and down, 0.5 loss one day, 5 loss the next, the system flags it. That's not structure, that's chaos.
And this is where it gets technical, but stay with it. So the term trade idea isn't just one order, it's a group of trades that share the same logic.
If you open 3 buy positions on 8 AUUSD goals at different times, that's one trade idea.
Because it's the same symbol, same direction, and close around the same time, even if you open them at different times, they're seen as a single unified position from a risk perspective.
So the system doesn't look at your trades in isolation, it's grouped them into logical bundles and applies the 2% rules across the entire bundle.
You can have multiple separate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short on GBP, GBY, and short on AUD/USD, and each position has its own distinct direction and access, there are 3 separate trade ideas, and each one can use up to 2%.
So let's say you go buy on gold and then you go buy again and again. So now you have 3 open positions in the same directions on the same asset.
Yep, the system treats that as one trade idea. So if the combined floating risk or even true loss from those positions exceed 2% of your starting balance, boom, you've broken the rule.
So let's go hands-on. So suppose you have a $100,000 account. The 2% max risk per trade idea means you can't lose more than $2,000 on any single trade idea total.
So you open 2 gold buys, 1 loss each. You don't play a stop loss. You hit market drop 100 pips. Each lot lose $1,000. That's the $2,000 total.
You're right on the line. If slippage or swap adds a few extra dollars, that's it. Rule broken, account flag, or liquidated depending on enforcement model.
And on some account, especially intermoney accounts with stricter tolerance, this breach may result in lots of unassessed or immediate closure.
And pro tips to stay risk consistent. Tip 1. Set your loss size based on account risk, not emotion. Know how many pips equal to 2%.
Tip 2 is use stop loss order religiously. Set them based on risk per trade ideas, not random track levels.
Tip 3, don't stack trades without calculating the combined rates. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade ideas mentally. If you're entering on the same setup, treat it as one, size it accordingly.
Tip 5 is if you want to split an ideas into multiple entries, do it smart. Scale in smaller, use micro lots if needed. Keep the total exposure below 2%.
The most common reason traders break these rules, taking multiple entries on one trade idea thinking is still separate.
Seventh is opening high trades after win, assuming they are playing with house money. Spoiler, market doesn't care.
And the third, neglecting floating loss. The trade may be closed, but the floating bet still counts toward your 2% risk.
This isn't just policy, this is a professional practice. Habit, fund follow this, bank follow this, and real trader follow this.
Exactly, we're not here to micromanage you, we're here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule who understand that small, consistent risks is the foundations of scalable capital. Those are the ones who grow. Those are the traders who go from $25,000 to $1 million.
And if you want to be a professional trader, you have to like ones. And professional traders always knows how much they are making on every trade every day.
And if you're still guessing your loss side or opening trades because the setup feels right, take this as your sign, step it up, get structured.
So this is more than a rule, it's a habit. Build it now and the paths of bigger capital and larger payouts become way more predictable. And that, my friends, wraps up the 4 essential rules of trading at WeMasterTrade, including the daily loss, the maximum loss, the profit consistency, and the risk consistency. Master these and you're not just staying compliant, you're building a foundation for serious capital management, long-term payouts, and scaling. So this is it. You've made it through the risk rule, the profit conditions, and the structures of our account. And now let's talk why it's all worth it, because at the end of the day, we know what other traders really want.
More capitals, more room to chase big lots, higher rewards without ever putting your own money at risk.
And that's exactly what the WeMasterTrade Scale Plan is built to provide. This is your roadmap from being a small account trader to managing a $1 million funded account. And it's not fantastic, it's a clear path with defined milestones.
The Scale Plan is our performance-based growth program. Lets you trade well and you hit your targets, avoid violations, and demonstrate risk control. We will increase your capital allocation. So that means, in other words, you earn more room to trade without spending more out of the pocket.
And let's be clear, it isn't tied to subscription models of Remix. You don't pay for scale-up, you earn it through consistency, profits, and escape line.
And the scaling is aggressive. We are talking doubling, tripling, eventually scaling you all the way to $1 million in funded capital, depending on where you start.
So at WeMasterTrade, we offer 2 types of scale plans depending on your account type: percentage-based scaling, amount-based scaling.
Let's start with the percentage-based plan. You begin as a evaluation trader level 1 with 100% of your base accounts. Hit the 20% profit target with profit consistency, and you are promoted to level 2, where your capital increased by 50%.
From there, the growth explodes. Level 3, 300%, level 4, 600%, level 5, 1,200%, level 6, 2,400%, and finally, maximum is $1 million.
And for each level, you don't just need to hit the profit target, you also need to complete at least 2 payout cycles so the system knows that you're not just performing, you're stable.
Now, for instant funding accounts, the scale work with the set dollar targets and the plan adjusts depending on your individual funder size.
Let's take a $10,000 funded trader as an example, and here's how the levels will look. Level 1 is $10,000, level 2 is $15,000, level 3 is $30,000, level 4 is $60,000, level 5 is $120,000, level 6 is $240,000, level 7 is $480,000, level 8 is $960,000, and level 9 is $1 million.
And each step has its own profit target, usually 10 to 20%, and some levels require profit consistency, especially in the early stages. Once you're beyond level 3 or level 4, the consistency requirement drops, and it becomes all about store performance and discipline. And now, I have to stop you here, and we're going to enter the economic analysis of today's news calendar.
Alright, so the economic calendar.
Okay, let's start with the New Zealand's Producer Price Index. Both input and output comes in quicker than expected. Input show just 0.6% compared to forecast of 1.4%, and the way down from previous 2.9%. Output also slowed to 0.6%, missing the 1.0% forecast.
That basically tells us cost pressures are easing in New Zealand. Less inflationary pressure could give Reserve Bank of New Zealand a little more room to breathe.
Meanwhile, in Australia's consumer sentiment surged. Westpac's index jumped 5.7%, way higher than last month 0.6%. That's a big swing, showing confidence is back.
Moving over to Europe, the Eurozone current account posts a surplus of 33.4 billion. The previous 32.3 billion, a healthy number, showing Euro is still exporting more than its imports.
Yeah, and that usually support the euros that splits in the short term.
Well, now let's talk about the upcoming big hitter tonight. Canada will release a whole patch of inflation data, CPI month on month, plus the median, trim, and common CPI numbers.
Exactly, inflation is a hot topic in Canada right now. The markets are expecting the CPI around 0.3% month on month. If it runs harder, the Canadian dollar could get a boost.
And don't forget the US numbers. Building permits and housing starts forecasts are 1.39 million and 1.29 million, pretty steady compared to the last month. We also hear from FOMC member Pullman later tonight, and traders will be listening for any hints on interest rates.
So, starting lines up for today, August the 19th. Some early support from New Zealand and Australia. All eyes now on Canada and the US tonight.
We'll be back to cover the reaction once the numbers are out. Don't forget to hit like, subscribe, and drop your thoughts in the chat. What data do you think will shake the markets most today? And that's the end of the news.
Thank you all for joining us today. We hope this session has been informative and that you're as excited about the opportunities at WeMasterTrade as we are. Remember to like, subscribe, and share the live stream with others who might benefit from it. And don't forget to follow us on our social media platforms for more updates, promotions, and trading tips. Stay tuned for our upcoming events, and we look forward to seeing you again soon. Until next time, happy trading.